Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Perpetua Resources.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. We're looking at a company that it really presents a fascinating paradox.
Perpetua Resources.
Exactly. It's a pre-revenue development stage miner. They're focused entirely on one project, the Stibnite Gold project.
And the paradox is right there in the numbers, right? If you just look at the accounting today, it looks pretty negative.
It does. I mean, the trailing 12-month net loss is around $22.1 million.
Which puts the EPS at what, negative 31 cents? To a general investor, that looks like a stock to run away from.
Oh, absolutely, if you're treating it like a normal operating company.
Yeah.
But that loss,
Yeah.
that's the cost of doing business when you're building out a massive project like this.
It's all CapEx.
All CapEx. They're purely in the deployment stage, exploration, permitting, engineering. There's just no traditional margin profile to look at yet.
So, okay, if they aren't generating earnings, what is the value driver here? What are you actually buying?
The value driver is de-risking. It's all about successfully advancing the project toward construction. The valuation expands through what we call net asset value accretion, or NAV.
Right.
So simply put, they aren't making money now, but they're making the asset itself more valuable just by proving the resource, clearing regulatory hurdles, and getting closer to the day they can actually, generate cash.
That makes their financial health incredibly important. I know they've already raised over $800 million in equity.
Which is huge. A massive capital base for a single asset developer.
But is that enough? I mean, this is a capital-intensive business. $800 million feels like a starting point for something this big.
It's a very robust starting point.
Mm-hmm.
It signals a ton of institutional conviction that you just don't see with most junior developers.
Okay.
But you're right to push on that. The full build-out will need a lot more financing debt, more equity, strategic capital, you name it. And that's a risk. But it also leads us right into why Perpetua isn't just another gold miner.
Exactly. We have to pivot to the strategic mode because the market is clearly not pricing this for failure. Analysts have price targets that imply, what, high single digits up to mid-20% upside?
Yeah, the street expects milestones, not quarterly earnings, to drive the stock.
So what's the real story?
The core insight here is that you're not just investing in gold. You're investing in a domestic defense mandate that could be backed by, well, subsidized capital.
Go on.
The Stibnite project is unique. It's positioned to be a major U.S. source of not only gold, which is great, it provides a strong value floor, but also antimony.
And antimony is the game changer. For anyone who isn't familiar, why is antimony so critical for the U.S. defense sector?
It's absolutely essential. It's derivative. Antimony trisulfide is a key component in military primers, tracer rounds, certain kinds of munitions. It's critical for the whole ground-to-round ammunition process.
And the U.S. currently imports most of it.
Heavily import-dependent. It's a significant national security vulnerability. The Stibnite project could potentially satisfy a huge portion of domestic demand.
And that security angle is being validated by some very heavy hitters stepping in. We saw that a major institution's $1.5 trillion national security fund picked Perpetua as its very first investment.
That's a massive signal.
It sends a clear message about how important this asset is strategically.
And that investment materially lowers the financing risk we just talked about. When you attract institutions that are explicitly linking your asset to U.S. priorities, you're playing a different game than the normal project finance market.
It suggests access to better debt terms, maybe? Government grants.
All of the above. Loan guarantees. It's a whole different world.
But the biggest catalyst recently has to be the partnership with the Idaho National Laboratory, the INL. That suggests this is moving beyond just geology and into direct defense integration.
Okay, so here's where it gets really interesting. This is where that policy-driven moat gets built.
Right.
The INL partnership isn't just some standard R&D project. They are building a pilot plant. And it's designed specifically to recover antimony, and this is the critical part, to demonstrate they can produce military-spec antimony trisulfide.
So this is about quality control, certification. They're proving their material meets the exact standards the U.S. Army needs for its supply chain.
Precisely. This embeds the company right into the public sector R&D and defense ecosystem. It directly supports the Army's goal of a fully domestic, secure supply chain.
So they're positioning Stibnite to be the preferred maybe the only domestic source.
It's a policy-driven moat that competitors, especially foreign ones, just cannot replicate.
That brings up a good question, though. If they're so deeply integrated into the defense supply chain, does that limit their commercial freedom down the road?
That's an excellent point.
Are they potentially stuck with government contracts that might not be at the best market price?
It's a valid concern. I mean, the defense mandate brings stability, guaranteed revenue, which is huge in a volatile sector. But you're right, it could theoretically restrict the highest commercial margins if, say, long-term fixed-price contracts are involved.
But gold is still the other half of the story.
Exactly. Gold is still a massive component of the project's value, so they keep that big commercial exposure. The antimony mandate really acts as a strategic floor, a risk mitigator, not a ceiling on the whole operation.
Let's see how the story is showing up in the price action. If the thesis is this strong, the technicals should be confirming it.
And they are.
Big
Time. The stock has been in a sustained, powerful uptrend. I mean, it's recovered dramatically from its 52-week low of around 780.
And it closed recently near 29 bucks.
Yeah, around 29.08. It's showing continuous upward pressure. It's what technicians would call a breakout continuation pattern.
So instead of digging into every single moving average, what's the high-level takeaway from the chart?
The chart just shows deep, sustained institutional commitment. When you look at the moving averages, from the little 5-day all the way up to the 200-day, they're all stacked perfectly, all moving higher.
A classic sign.
It's a rare multi-time frame alignment. It confirms this isn't just some short-term trading frenzy. This is long-term belief.
We also see momentum indicators like the Mankey D confirming that strength. But I do notice some short-term oscillator, like stochastics, are flagging it as technically overbought. Should people worry about a sharp pullback?
That's a great question. Normally, overbought means, tap the brakes.
Right.
But in a powerful, fundamentally driven uptrend like this one, especially one tied to national policy, that signal usually just leads to a shallow consolidation, a quick pause for breath, not a major reversal. The momentum is just too strong.
And the smart money validation is there, too. Institutions and hedge funds own, 70% of the float?
Around 70%. It signals really strong sponsorship and accumulation. That concentration of institutional capital, plus the backing from that national security fund, it acts as a major anchor.
So they're buying the execution story.
They're accumulating as the project de-risks, betting that the success of the early works in the INL partnership will lead to a big re-rating of the NAV.
Okay, let's talk timeline and catalysts, since a real earnings report is still pretty far out.
Early 2026, probably.
Right, so the focus for the next, say, 18 months has to be entirely on project execution updates.
That is it. Execution velocity. Early works construction at Stibnite is already underway, which is great. And this is all happening ahead of the final investment decision, the FID.
The point of no return.
Exactly, where they commit to the full build-out.
Yeah.
That's targeted for spring of 2026. This period right now, leading up to the FID, is where you see the maximum NAV accretion happen.
So what specific news should listeners be tracking? What are the key things?
3 things. First, updates on that INL pilot plant. The design, the initial tests, the concrete results showing they can make mil-spec antimony. That's the fastest way to de-risk the processing side.
Okay, 1. What's 2?
Second, progress reports on the early works. Is the infrastructure build-out on schedule? They've been expanding their leadership team to mitigate execution risk, so watch for that.
And the 3rd?
Finally, keep a very close eye out for more government support announcements. Grants, loan guarantees, maybe Defense Production Act support.
Yeah.
Anything tied to that critical mineral angle.
And all this is happening with some serious macro tailwinds at their back. It's almost a double benefit.
It really is. You have 2 powerful forces. First, the price of gold. If we see hints of rate cuts or just general global uncertainty, gold goes up. And the implied NAV of a big project like Stibnite rises with it.
And the second force?
Geopolitical instability. The more tension we see, the more supply chains get realigned, and the strategic premium on domestic antimony just don't dance, it goes through the roof. This tension directly strengthens Perpetua's story.
All right, we have to talk about the bear case. No project this big comes without risk. What's the single biggest concern an investor has to accept?
It's execution, permitting, and timeline risk.
By far.
Their entire valuation is hanging on the successful, on-time, on-budget execution of this one project.
And the FID is still almost 2 years away.
2 years is a lifetime in project development. And, more importantly, it's a lifetime in politics.
I want to press on that political angle. What happens if the defense focus shifts? A new administration deprioritizes domestic sourcing,
Hmm.
or there's major pushback on permitting.
That's the core downside. Any major delays, cost inflation, political headwinds that slow things down. The net present value of the project gets hit hard. Management is trying to mitigate that, but the political environment is the big unknown.
And then there's the financial and funding risk we mentioned. They've raised $800 million, but a project like this needs billions. Where does the rest come from?
They absolutely need more financing. And if they're forced to tap the commercial debt market at a bad time or issue a ton of new equity,
Current shareholders get diluted.
that's the risk. It's a real possibility.
However, this is where the thesis really earns its keep, right? The mitigants.
They absolutely are. The funding risk is so much lower because of the strategic nature of antimony. The U.S. Army is explicitly interested.
Right.
The backing from big funds in the INL partnership just drip. It radically increases the odds they'll get concessional or strategic capital. Money that's cheaper, less dilutive, or comes with government support. The government basically has an incentive to make sure this project happens.
So let's tie it all together. What is the core investment thesis for Perpetua Resources?
I'd say it offers leveraged asymmetric upside. You get the stability and value of a huge U.S. gold deposit combined with the strategic premium of one of the only scalable domestic antimony sources.
A perfect alignment with commodity demand and U.S. national security.
Exactly. You're investing in a transition story. They're moving from concept to tangible execution. Early works are happening, capital secured, and the INL partnership is anchoring their role in the defense supply chain.
So it's a story of de-risking through both policy and execution.
And the high institutional ownership and bullish technicals suggest the market believes those milestones are going to be hit.
For someone looking at this, what's the right investment horizon?
To capture the maximum value, the main play is a multi-year hold. Through the FID in 2026 and into initial production, maybe 2028, that's when the execution risk really drops off.
But there's a shorter-term play, too.
For sure. The strong technical trend and the news flow around the INL plant could also support a more tactical, say, 3 to 6 month swing position to play those specific milestones.
Here's a final thought for you to consider. When you're looking at a huge resource project like this, which risk premium is more reliable today? The typical volatility of commodity cycles and gold price swings, or the foundational stability that comes from an explicit, policy-driven, and publicly backed defense mandate?
That distinction really is the alpha in this trade. I tell listeners to keep a very close eye on those project execution reports and any government funding news over the next quarter. Those will be the drivers of the next leg up.
Absolutely. Thanks for walking us through that. Remember to subscribe to Smart Wealth with Joshua for more detailed analysis designed to keep you ahead of the curve.